Students, last session we discussed the introduction of banking, and also we discussed the history of banking system, and also we discussed the functions of commercial bank. And today we are going to discussing the role of commercial bank in bank and the economic development of particular country, and the non-banking financial institution, and the mechanism and the technique for the credit creation of commercial banks. Now we are going to discussing the mechanism and the techniques of credit creation of commercial bank. Now we are going to discussing mechanism or techniques of credit creation by the commercial bank. The bank credit refers to the loans and advances. Money is said to be a creation of when the banks through their lending activities and make a net addition to the total supply of money in the economy. Likewise, the money is said to be destroyed when the loan are repaid by the borrowers to the banks, and consequently both advancing the loan and lending the amount and repay the amount is known as the technique of credit creation by the commercial bank. The banks have the power to expand and contract demand deposit. They exercise the power through the granting more or less loans and advances occurring their asset. These powers of commercial bank to create deposits through expanding their loans and advances is known as the credit creations. So the deposit is divided into two. One is primary deposit, another one is derived deposit. The modern banks are create deposit in two ways. One is primary deposit, another one is derived deposits. When a customer gives cash to the bank and the bank creates the book debt in his name is called deposit. The customer give their own cash to the bank, and banks they are created the book debt is known as the primary deposit. But when such a deposit is created without there being any prior payment equivalent to the case, it is known as derived deposit. For example, the loans. And what do you mean by the primary deposits? The primary deposits is out of these primary deposits that the bank makes loans and advances to the consumer, and the initiative is taken by the consumers themselves. In the case, the role of bank is passive. So the deposit is also called passive deposit, that is known as primary deposit. Normally the customer we are deposited in the bank, that is known as the primary deposit. And credit creation literally means the multiplication of loans and advances. The credit creation is known as multiplication of loans and advances. Every loan creates its own deposit. Every loan creates its own deposit. Every loan creates its own deposit, and the central bank insists the banks maintain the ratio between total deposits they create is the case their possession. For example, banks do not keep any excess reserves. In other words, you do exhaust the possible avenues of the income, any activities giving the loans, etc. up to the maximum extent. The primary duty of the commercial bank is one is collecting the deposit, another one is to provide the loans. There are no drains in the supply of money. The public do not suddenly want to hold more ideal currency or withdraw from the time deposit. In the time deposit, there is no possibility to withdraw earlier. After the maturity period only we can withdraw our deposit, that is known as time deposit. And next we will move to the role of commercial banks in economic development. Now we are going to discussing the role of commercial bank in economic development of a country. The first point is known as capital formation. The banks play a very important role in the capital formation, which is essential for the economic development of a country. They mobilize the small savings of the people and scattered over a wider area. The collecting the amount from one particular group or smaller area, and it will give to the wider area and wider their network branches all over the country, and it make available productive purposes. And nowadays banks offer a very attractive schemes to induce the people save their money. For example, high interest rate, safety and reliability, and save their money with them. They bring the savings mobilized and organized money market. If the banks do not perform the function, savings either remains the ideal using the creating the other asset. For example, and the banks creating their ideal assets, especially gold, which are low in the scale of plan priorities. And the second function, very important function, that is not a creation of credit. The banks create the credit for the purpose of providing more funds to the development project. And the credit creation leads to the increased production, employment, sales and prices, and thereby they bring about the faster economic development of particular country. So without the credit creation, the banks not functioning smoothly. And the third one is known as channelizing the funds. And the banks invest the savings mobilized by them for the productive purposes. And the capital formation is not only the function of commercial banks, and the pooled savings should be allocated where pooled savings mean collected savings from the public. It should be allocated the various sectors of the economy with a view of increase in the productivity, especially industrial sector and the service sector also. Then only it can be said to be have performed the important role in the economic development. And the fourth point is encouraging rights type of industries. Many banks help the development of right type of industries by extending loan to correct person and the correct industry. That is the meaning. The many banks helps in the development of right type of industries by extending the loan to right type of persons. In this way, they help not only for the industrialization of the country but also the economic development of your country. They grant loans and advances to the manufacturers whose products in the great demand. The manufacturer in turn increase their products by introducing the new methods of production and using the many machinery and assist the raising the national income of the country. The banks will provide the loans and advances for right person at the right industries. Sometimes the subprime lending also clone. That is how the economic crisis in the economic 2007 and 18 the USA economic situation functions smoothly with the help of the commercial banks to provide the loans and advances to the industries as well as the individuals. And the fifth point is banks monetize debt. The commercial banks transform the loan to be the repaid after the certain period into cash, which can be immediately used for the business activities. And the manufacturers and the wholesale traders cannot increase their sales without selling goods on credit basis, but credit sales may lead to the lockup of the capital, because if you sell the products for the credit and the credit we cannot be able to repay, your industry will become a loss. As a result, the production may also be reduced due to the credit sales. As banks are lending money by discounting the bills of exchange, business concerns are able to carry out the economic activities without any interruption. And the sixth point is finance to the government. The government is acting as a promoter of industries in the especially underdeveloped country, especially in India, Bangladesh, Pakistan, Nepal, Bhutan, for which finance is needed for it. Banks provide the long-term credit to the government by investing their funds in the government securities and provide the long-term credit to the government by investing their funds in the government securities and short-term finance by the purchasing of treasury bills. The RBI, Reserve Bank of India, is given 68,000 crore to the government of India in the year 2018 and 19. This is the 99% of surplus excess money in the RBI to give the financial help to the government to run economic situation smoothly and functioning very smoothly. And the seventh one is employment generation. After the nationalization of big banks, banking industry now has grown to the great extent. Now, for example, the State Bank of India, more than 2,500 branches are all over India. They will provide the employment opportunity both directly and indirectly about 3 lakhs people. So behind the screen, the banking sector to provide the loan and advances, and also the banking sector provide the multiple employment opportunity for youngsters, which leads to the creation of new employment opportunity. And the last point is the banks promotes entrepreneurs. In recent years, banks have assumed the role of developing entrepreneurs, say particularly the developing country like India, by introducing the new entrepreneurship to take up the well-formulated project and the provision of especially the small scale micro industries and medium scale industries, even the large scale and industries also. Now the modern banking sector system provide the you give loan to the industrialist very easily and small. The rules and regulations are given by the banks, especially like technical and managerial guidance. The banks provide the 100% of credit for the worthwhile project, which is also technically feasible and economically viable. Now the banks are providing even education loan, housing loan and personal loan, etc. And next we will move to the non-banking financial system. A non-banking financial institution, NBFI, or non-bank financial company, NBFC, is the financial institution, but it does not have the full banking license or is not supervised by the Reserve Bank of India. This non-banking financial system is not controlled by Reserve Bank of India and also not supervised by the Reserve Bank of India. The non-banking financial institution do not carry on pure banking business, but they will carry on other financial transactions. For example, they are receive the deposit and give the loan. For example, Shriram Finance, Muthoot Finance, Manappuram Gold Loans. It is the best example for the non-banking financial institution. Now the the General Insurance Corporation, UTI Mutual Fund, it is also one of the non-banking financial institution. The non-banking financial institution can be classified into 2 categories. One is stock exchange and another one is other financial institution. Under the latter category comes the finance companies, finance corporation, SIT funds, building society, issue houses, investment trust and unit trust, and insurance company also come under the non-banking financial institution. Students, next class we will continue the very important topic, that is Reserve Bank of India, and also we will going to discussing the functions of Reserve Bank of India and the methods of credit control and open market operation. Student, next class we will, don't miss the next class, we will discuss very important concept. And also yesterday I thank those who are come yesterday for Google online live meeting for your doubt clarification, and tomorrow also I will expect more students to participate this online live program. Thank you. Stay safe in your home.